Hi, and welcome to this week's market update presentation. Latest news. President Trump's announcement last Wednesday of sweeping tariffs on all imports into the US sent shockwaves through financial and energy markets. The new tariffs included a 25% tariff on automobile parts into the US, a broad 10% tariff on all imports into the US, and most importantly, an additional reciprocal tariff on imports from countries that are running a trade deficit with the US. For the European Union, this will mean an additional 20% tariff on all of its exports to the US. For China, this will mean an even higher additional 34% tariff on its exports to the US. Soon after, China announced that it would put in place retaliatory tariffs on all US imports into China to match the tariffs announced by the US. Today, in response by that retaliatory action, President Trump announced via X that unless China backs down, the US would impose a further 50% tariff on all Chinese goods. This would in turn push the tariff on Chinese imports in the US to an astounding 104%. The reaction from financial markets was for very sharp sell-offs. Looking at the US stock market, major stocks in the US, such as the S&P 500 and the Dow Jones, had their worst two-day trading period since the peak of the COVID-19 pandemic in March of 2020. Global stocks in Asia and Europe saw similar decreases of around 10 to 12% over just the past few days. Energy markets were not spared from the sell-offs, with natural gas, electricity, and oil prices all coming down following the announcement on Wednesday. US financial institutions increased their risk of a recession in the US, with JP Morgan increasing their odds of a recession up to 60%. Growth forecasts for the global economy have similarly been revised downwards as a response, with ING, for example, lowering its Eurozone GDP growth forecast for 2025 to just 0.6%. Weather. In terms of weather conditions, temperatures are forecasted to remain above the seasonal average over the next 7 to 10 days, helping ease any lingering heating demand and reducing overall gas and power demand across the continent. Precipitation is expected to be more pronounced starting early next week, while wind speeds are expected to continue to remain below last year's levels, weighing on wind power generation in particular. Crude oil and LPG. As mentioned earlier, crude oil prices saw sharp decreases over the last few days, with Brent crude oil prices decreasing by 10% over the past week and pushing prices to the lowest level in almost 4 years. Even the announcement by OPEC Plus of additional production increases was not enough to blunt the drop in the market. Natural gas. Looking at natural gas pricing, we see similar decreases as with crude oil, with the front quarter TTF pricing coming down 10% over the past week. The decreases were then felt across the curve, with the front year pricing, for example, coming down by 5.1% week over week. One other point to highlight is that the decreases we're seeing in natural gas markets, particularly in the quarterly products for 2025, have reversed the backwardation we were seeing between Q3 and Q4, with Q4 pricing finally inching up above the Q3 pricing. The impact of this is to potentially incentivize greater injections into storage, which could then ease some of the concerns over storage levels ahead of next winter, helping overall gas markets in Europe. Speaking of gas storage levels inched up slightly over the past week, with storage levels increasing to just under 35% at the end of last week. Nonetheless, gas storage levels remain noticeably below last year's levels and even below the average since 2012. Looking at the net withdrawals, we finally moved into positive territory, with injections reaching 1 terawatt hour per day. This is very much in line with what we've saw last year, and one of the reasons why we've seen the gas storage deficit versus the previous year stabilize at around 25%. In terms of total demand for natural gas, we've seen that continuing coming down over the past week, largely due to the weather conditions. And in turn, we're also seeing a drop in total supply, reflecting the bearishness in the market in terms of pricing and the lower total demand. The main decreases in total supply came from gas flows from Norway in the North Sea and from lower LNG sendouts. Demand for new LNG import arrivals has also come down in Europe as a result of those same factors, and in turn we're seeing the share of LNG deliveries to Europe come down. The sharp drops in European gas pricing compared to the more modest decreases in Asian markets is further de-incentivizing additional cargoes going to Europe, and instead we could start to see some of those flows being redirected towards Asian consumers. Lastly, in terms of investment fund positions, we did see a slight drop in net long positions, again taking into account the fallout from the tariff announcement, as well as the bearishness that we have seen across European gas prices. Coal. Coal prices saw a similar price evolution as with natural gas, with decreases over the past week for the front year. Rhine water levels also came down over the last few weeks in particular, pushing levels to near the lowest levels since at least 2010, and raising concerns over the delivery of coal to coal-fired power plants in Germany, potentially weighing on coal and electricity markets further into the future. EU and UK emission allowances. Looking at emission allowance pricing, here we see on the European side of things a roughly 7% drop week over week, very much reflective of the fallout from the tariff announcement and the prospect of lower economic activity in Europe, reducing overall emissions. In the UK, we see a similar bearishness, although it is more contained in large part due to the ongoing discussions in recoupling the European and UK carbon allowance markets. In terms of power sector emissions, those have come down alongside total natural gas and electricity consumption due to weather conditions, and is another factor weighing on carbon allowance pricing. Lastly, looking at investment fund positions, here we see those have come down in the European side of things, in line with the bearishness in the market. Over in the UK side of things, as we mentioned just earlier, the ongoing discussions on recoupling the European and UK markets continue to add support to those net long positions. Electricity. In terms of electricity pricing, we see a similar price evolution as with natural gas, with the front quarter pricing coming down almost 10% over the past week. In terms of the forward years, there we see more modest decreases, but nonetheless, that bearishness persists along the curve. Compared to other markets across Europe, we see a similar price evolution with price drops across European electricity markets. In terms of total demand and residual load, we have seen those come down again over the past week, very much in line with what we saw last year. In terms of the supply mix, starting with nuclear power generation, we have seen decreases in total output over the past week, again in line with what we saw last year, and very much due to maintenance needs across the French nuclear fleet reducing their output. Nonetheless, as those needs get wrapped up, the expectation remains for a further improvement in total nuclear power generation across Europe. Looking at renewable power generation, there we see an increase in renewable output over the past week, largely due to an increase in solar power generation, and as a result, a corresponding decrease in fossil fuel power generation, contributing to the lower emissions from the power sector that we saw earlier. The increase in renewable power generation has largely been driven by the improvements in solar power generation, which continue to reach new record highs for this time of the year. And then looking at fossil fuel power generation, we continue to see coal and gas-fired power output lower over the last week. Lastly, looking at the evolution of guarantees of origin, there we do see more modest movements over the past week with some slight increases for some 2026 products, but nonetheless, prices remain relatively stable over the last few weeks. This covers this week's market update. Thank you for joining.